I've been seeing a lot of people have been talking lately about the Fed may be cutting rates soon, which may mean lower mortgage rates. And unfortunately, it's a little more complex than that because last time we saw this, it actually caused rates to spike by about a full percentage point, and we really haven't seen them cool off since then. So we may want to be careful what we wish for with the Fed cutting rates. But you never know. This time, the rates may actually come down for mortgages. Let's dive into the numbers quick.
Okay, so this is called a candlestick chart, and this is of the mortgage-backed securities market. This here is actually what determines where mortgage rates are going to be, not what the Federal Reserve sets the federal funds rate as. You can see a year ago, or I should further say, green is great for rates, red is bad for rates. So it is color coordinated that way. So you can see the market was improving here, and then there was a big sell-off on the mortgage-backed securities market. And ironically, this is when the Federal Reserve last cut their federal funds rate. So normally, historically, that lowers mortgage rates. Actually, it did the exact opposite last year. It caused real mortgage rates to go up by about a full percentage point. And the markets had some ups and downs. This is like when Trump was inaugurated. Then Trump had started cutting the federal budget. There was confidence in the USD. Then right here is when the tariffs were introduced. So there's a lot of volatility that goes into the bond market here. And you can see here, things have been improving a little bit as of recent. Last week, this big spike was when the Department of Labor revised their workforce numbers, which made the market a little confident that, hey, maybe there will be a rate cut coming next month. The truth is, we don't really know if the rate cut is actually going to improve mortgage rates because last year it had the exact opposite effect. But as of last week, the mortgage-backed securities market did improve on the news that there may be a rate cut. So we just have to find out. So in summary, we don't know for sure if the rate cut will cause mortgage rates to go low, but so far from what we saw last week is bond investors did like the idea of a rate cut, and it caused the treasury bonds to go down in value, which caused the mortgage-backed securities to go up in value, which means lower mortgage rates for buyers. So hopefully that's a good sign of things to come.